All right, welcome to December, everybody. Hope you guys had a great Thanksgiving. For those who haven't talked to, doing an update. I want to save a global macro update for a little bit longer video as we come into month end, and then I've got an update for crypto I want to hit on. That's pretty extensive, just the end of the cycle work. December's always been very big in the crypto space, so I know that's moving around a lot. Maybe I'll just hit on that at the end of the video. But today, a couple good teaching points, and I was thinking about this around lunch, the distinction between the moves off the open versus kind of the more traditional swing trades and the technical work that maybe you guys are familiar with my work, or really anybody that's any good on the technical side. But as far as the cycles go, the open is just a little bit different animal. So I think sometimes we try to bleed into the teaching, like the bigger picture stuff with off the open, and it's just a little bit, you got to think kind of different. Like if you're a football team and you're good at running the option, and then you want to start trying to run north south in football, it's just, those are different game plans. Kind of, you got to know when you want to use that approach versus what defense. But really just around the open, there's just 30 minutes to an hour, really 30 minutes, that it's a different style. And then you can settle into more of your cycle work. More of the traditional edges that we use will work better. So anyway, I've been kind of out of it. Had some family stuff going on that the guys on the prop team kind of have been learning about. But anyway, I want to finish December strong, finish out the year strong, and get going into set up some positive stuff for the beginning of next year, the first quarter. And I guess that said, I tried to figure out, I had a bunch of you asking me kind of what deals I was going to run. I was a little bit behind on the Thanksgiving traditional mainstream media stuff, but I put together a Cyber Week deal, and I just decided, all the courses, all the teaching, the massive discounts, and then there's really about 9 to 10 grand worth of value here on the coaching and educational side. And I'm going to just put together that. And we've got 7 to 8 people on this new prop desk right now. And I want to get that to a dozen, maybe 15. And I don't want to bring everybody on into the end of the year, but for the first quarter, I think that's kind of possible. We've had a few kind of growing pains on the tech side, but it's starting to work some of that out. And so anyway, the team's been a little bit patient, but now that the vol's picked up, like we're having some big days. I mean, today, oh gosh, what did we do? I'll talk about the big picture, I guess, tomorrow, but just coming in with VIX above 2021, I said that's where you're going to have bigger days. So putting together $6,000-$7,000 in a couple hours, you can easily kind of put together 3. Whereas when you're low VIX, below 20, VIX 15, 13, 14, you can't really push it because the market just fades and chops back on you, and then there's nothing to really add to. So those days are more like 1,000, 2,000, 1,000, 2,000 around the open, around the morning. If you want to trade from London all day and you want to beef up your size, but if you're trying to risk 2 grand, 3 grand a day on low VIX, I mean, that's pretty good. Consistently pull out 2 grand a day. That's big money. But now when you get the VIX to pop up, that's when you can get these bigger moves on the NASDAQ. You can get the bigger moves, especially on the downside on the risk off day. So today was Mondays, they tend to grind the market up. And then Tuesdays, we always kind of reference that Tuesdays, a lot of times a reversal day, and it happens to be the downside. We'll see if that happens with the VIX. Let me just look. I'll show you the VIX futures right now. We broke above. I talked about forever. All these lows down here, these were candidates for market tops. And then the big pivot was above 20-ish, 1920. That changed a lot of things. You got above pi, and now we're trending volatility higher, which is much better for trading. You want to be an active trader, much better, higher vol. So you can see anytime the market gets high. I mean, I've been shorting vol lately just because I missed this move into the 30 area on the futures, but I mean, you can get an average cost above 25, and at some point vol will fall back below 20 or near 20. It's just an easy trade. But point being, so there's going to be a lot more back and forth. It makes for just more interesting swing trade, day trade sessions. Even core stuff gets a little bit more fun. So the big takeaway today, sorry, I'm a little bit all over the place. Oh, I guess what I wanted to say was, if you guys, so this end of year stuff I put together, the cyber work deal. So you got a bunch of educational products and stuff. It's basically like half off. And then we launched a new prop desk. Again, I got like 3 or 4 spots on there that I want to put together. If you have more questions, you can find me on the Instagram, not the Instagram, the Telegram. You can shoot me a message via the website. But if you're new, normally it was 5,000 grand to join the prop desk. Some of you have been around, you've been through some of the coaching stuff. I did that discount of 3,500. So it's 50% off now. I'll put the links in the YouTube here and the stuff I send out if I send an email out. But then also the savings on the combine, if you want to kind of go to long alone, it's great. I got a link for that. So, I mean, that's 25% off. $100 a month. 5 contracts is a lot. You can do 2 to 3 grand in a day just on the smaller account. We might actually use some of those a little bit more. I was thinking about the other day, it'll kind of open up accounts a little bit faster. But yeah, so anyway, the great deals there. Probably do a more extensive email about it. But anyway, yeah, so I am offering that for some of you that have asked as far as discounts. So I want to do that. These Top Step guys are doing that through the 10th. So I'll just run this same promotion through the 10th of this month, and then we'll, I don't know, probably figure out from there what the team's looking like. So today, without really getting into the big theme of things, which is still the inflation story, you know, every headline that comes across Bloomberg or anything that comes across your phone is the whole Omicron BS about the virus. And so that's just the headline driven things. But what we really need to focus on is the macro signals around the growth, which is probably still going to slow into the first part of next year. But the inflation narrative can come in a lot because that was running hot into the highs when actually the inflation peaked. And now we're going to get the opposite, where inflation's coming down on a relative, on the margin basis. So that's going to, the market's pricing that in differently in yields in the dollar already. I'll get into that more in the macro, but what really I wanted to highlight, guys, just today on today's trading, it was a classic pattern of, I talk a lot about working with the walls, the retracements, and the 100% retrace is the toughest to trade, but I wanted to put some context around that as it matters to the open, because 100% retrace. So if we're looking at this chart, there's 2 different time frames. I got S&P's up and I got a NASDAQ on the right. I have like a weird echo in my ear, it's throwing me off. This audio records right. Okay, guys. So here's the hourly, which is good for the intermediate term. So if you're not familiar with what we do and how our model works, intermediate term, we break down long-term, intermediate, near term. Intermediate term, you have 30-minute to hourly chart, but really it's hour, 4-hour daily chart. And that's going to give you the trend perspective, the viewpoint, and the cyclical work within that time series. And we've essentially had some really good ebb and flow around the hourly. And you can see that in the RSIs too. low, 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 low. This is kind of low too. Low, low. I mean, you don't have to overcomplicate things. The point I want to make about the retrace, if time and distance matters, and then obviously points. If you go from here and we crater on a risk off move, I don't care about the headlines, it's always something. But that type of move, that time and space, very hard to go to a new high, right? On the next rally. So we rallied about 50% and failed. That's the whole point of the wall concept. You put in the wall, right? Put in the wall, fail about halfway, multiple times, boom, boom. So those are your edges. That's like, it's there. Sometimes it's, people don't realize that. It's a simple concept, but it's there all the time. And that is a tough move. That's not going to happen a lot in the intermediate term because it takes way more participants, again, more time, more space. I mean, this is S&P 4643, call it, to almost 4,500. So 143, 150 points. That's a lot more to retrace versus a 1-bar move off the open. Okay, I'll explain a little bit more in detail. So today, this is the NASDAQ. -15-minute chart. Let's go to a 5-minute. So on the open, this is some inside stuff I teach my guys. You get the power move down on the open, which is bearish. So this is a 5-minute. If we go to the 1-minute, see if I can get that. A lot of times I'll just wait for a 1-minute close. I'll draw this back. Boom. 1-minute bar close. Which direction is that? Big, fat, bearish, real money candle. Downside, that's where the power is. This is your open trade. Boom. Bearish, follow through. Okay. Short, where's my risk? Above the open, above the highs up here. There's your follow through. And you can add and reduce into that also. But after that move, it's a completely different scenario because to take that, it seems maybe if you're zoomed in on the 1-minute that's a big move down, right? But so many times the big money likes to take it down on the open for whatever reason. Sometimes you got to trade down into like previous days close. Lots of different market dynamics. Let's go to 15-minute. Just for context. All right, look at this. Look at this. Okay. Remember that powerful move on the 1-minute look like? Is small relative to boom, 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 right? Even these bars down. So by the time you get all of that on the open, there's plenty of times the market can finish higher, especially when the VIX is high, you're oversold. But I just want to stress that when you have this type of drop on an hourly time frame, much different than a 1-minute bar that's like this. You can easily take the 1-minute higher to new highs. So I'm not, you know what I mean? So you were trading the open, you're like, oh, 100% retrace. I don't know, it's not really in the cards. That's different than going from here to here, 150 points. And, you know, this morning they opened up down, I don't know, 7, and went to a new high. Big difference. So on the open, you can play that move down, but here's the crux of my teaching for the day. You open that move down, that first move down, but then you want to be playing the long. for the bigger 30-minute and hourly move back. And a lot of times that'll do that. We open up down on a Monday, and then all the money comes in, and you just bid it up the entire rest of the day. It's uptrend. So yes, down move, tricky for the open, 100% retrace, new high, chop, 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 uptrend all the rest of the day. But just, hopefully I'm kind of coming across, but my point is that you can get the down move and then a move to a new high on or around the opens. That's different than a big picture classical teaching that I do, where it's like, hey, this is a daily move down, the euro, it's going to be hard to retrace an 8-week move. This is the edge to be short. And then you're setting up for a core short. You're setting up for a swing trade. Day trade, you can push those reversals a lot more. Okay, so then when you understand that, the next thing is, okay, how do I play that? And this is what I always say, is that when you come into a trade really matters, because how you play it is going to really either make it difficult or easier, depending on where you are in the trade when you come into this. So let's try to explain it. So these are both 5-minute charts. Maybe I go to the 1 minute on around the open. So know that NASDAQ goes to a new high later in the day, okay, around lunchtime. But here's the open action. So this was the initial move down. This will maybe explain. I tried to record. I did try something a little bit different, where I recorded and fast forwarded some of my trades, so you wouldn't sit there for 2 hours trying to watch. But you can see that how I'm trading both of them, and then the ebb and flow, and how to kind of deal with the move down on the really, really small time frame around the open, and then realizing that there's a 30-minute cycle, a much larger 30-minute cycle on the other side of this little shithead. So you come in here, boom, market's down, 30-minute cycle was high all morning. Let's see if this show you something there. And so this is kind of what I'm trying to point out, is this cycle here low, and then all afternoon it's up. Okay, so it's trading the open down, and then in the back of your mind setting up a little bit contrarian, but with the good lower levels, low on a cycle, where you have a potential to get them to grind it back up to a new high, especially like on a Monday. So you're needing to hold almost 2 different time frames in your mind, but it's just trading around the model. So again, it's how you work the position. So here's the 5-minute. Notice on the NASDAQ, we fail at pi. The initial open, the power's to the downside. There's money to be made there short. And then look, you get back to levels where you're back at yesterday's low. So these aren't levels where you want to press the shorts, especially if you just want to trade the open. You should be covering. You should have been short, covering, covering, covering. And then if all you want to trade the open, you're done. Maybe you made a couple grand. I did that in one of them. I was like, okay, I did 2-3 grand with inside an hour here, short NASDAQ, and I was done for the day. I didn't want to push it. The other one, I was like, all right, let's see if this sets up for a bigger move back up, and I'll work the long side of the NASDAQ. And that's what I did on this time frame. So you can, I know the picture's not great, but here's S&P, here's NASDAQ. S&P, short, and then this was me working the short side, short cover. And this was really choppy on S&P, short cover. And then it went to a new high, and I was like, okay, I had enough of that, and I was out. But I ended up down on the day there. But meanwhile, on the other side, I was working. See, this is my long in the NASDAQ off the low. Held that for like a full 5-minute or 15-minute cycle. And then long, out, long, out, long. And then I was long, long, out, long, out, long, out, long. And I played this bigger, more repetition, more volume, more size on this side than here. So like 8-to-1 ratio. And then my guys know a little bit more about how to trade that. I don't know. I feel like I'm leaving you guys with a lot of complexity and not simplicity, but this is, I guess what I'm trying to say is the open, it's sometimes you just trade the first 30-minute down move, and then if you didn't catch this move down, going long here is tough because you could get run over on a hard move down. Like if it's another risk off day, you're just going to be fighting it and you're going to be on the wrong side all morning. But if you make some money down first, then putting that long on, like I bought that low just because we were back near yesterday's low, and I was like, okay, I put away some money because you notice I was down on the day on S&P, down on the day on S&P, but that wasn't the case in the morning. It was not the case in the morning. I was up first on S&P, and that was like, okay, I put some money away, made some money. Now I'll take the long contrarian. That's what I always say. It makes when you're on the correct side of the immediate trend, that allows you and funds your contrarian trades in a proper controlled risk management way. And then sure enough, that was the bigger move. Hopefully that makes sense to you guys. So then I'll just zoom in one real quickly just to summarize that. Here's your failure at pi technically before the open. Then you get the open, boom, the move down. Look how oversold you are at that point, right? So that was okay. That's a good spot to take along. It was the low of the day. And then from a duration standpoint, I was first short here. Okay, and then this is where it got choppy. So I was short here covering, then I went long down here. But then when we bounced back up, like I was fading this. I was fading that short. I was covering some here. I was fading this entire zone. And yeah, I actually thought we were going to make a new high. Just, I don't know, it's Monday, the market's been oversold. It tends to, the liquidity, it tends to do that. But until it does, I mean, there's good edge to be short, right? So short, cover. All these sales up here are good. Shorts, cover. And so I did that several times on the S&P. Meanwhile, I was posturing up with my long on the NASDAQ. And then, you know, NASDAQ is just higher lows than the rest of the day. But that's how you play. Some guy, when you guys don't pair trade and you just want to like, oh, I need to be short into the high of the day. And then you like, even the pros will short right here. And you get stopped out, but it's like, well, what were you doing down here? Where was your longs here and all these higher lows? There's money to be made there. You got to put it all together and know how to work both sides. But if you're just, I got to put something on, take something off, pick a level. I mean, that's what happens is people were short here, and then the bulls pushed it through, and that's what creates your rally. And then you can see that was the support the rest of the day. I think what else I want to say about that. Guess I can zoom in on the 1 minute. So yeah, it was just a lot of short right off the bat. Let's trade the open and then set up. And it's not get heavy long here, guys. It was like literally I bought one contract and just sat on it back to the bands and then boom. And then traded this S&P around a little bit more in here. And then we got this pullback again and I was buyer there. And I was covering my shorts on S&P. And then granted, I resold S&P into this high because it worked all day. But I was long my NASDAQ from lower here. So it was balanced. And then when we went through, went through here. Look how this 1 minute chart, this is just all add and reduce on the tick chart. I don't know if I can get that up. Well, I'll paste that recording I tried to do on the tick chart, but I was in and out. I was in and out quite a bit. Once we went through here, guys, what'll happen on the tick chart is the tick chart will be chilling, like inside of a window like this. You have your tick chart up, and the price action's all contained within this window. And then when something starts to really move, like the buyers come in or the sellers come in, the tick chart just goes straight through the top of your window. That's when you know you have buying. That happened right here. It just goes right through. And what do you do then? You buy the shallow dips. Buy, take some off. Buy, take some. I was taking some off, buying some back. Taking some off, buying some back. Taking some off, buying some back. And I was maybe short 1 or 2 here, but then I got more aggressive on this move, and that creates the more money on the NASDAQ for the day. And what started was an up day for S&P. I end up losing $1,000, for example, on that one account, but I was up 8K over here. So I don't know. Hopefully the mad scientist shit I just drew all over the place made sense. I'll see some of you guys in the morning. Again, if you're new, I'll try to post this around the socials. If you want to take advantage, guys, of the Cyber Week, the holiday sales, it's 50% off. It's going to get everything, all my courses that I've ever put together, tons of value, 9-10 grand in value. I paid 12 grand. I'll just learn Forex from a couple guys 10 years ago. It was well worth it. I never had a team. I had like some weekend recorded instruction. But I learned a ton of setups that I incorporated into our model and our institutional book. And I mean, it's been worth hundreds of thousands of dollars, millions of dollars over a decade easily. Just a few simple concepts. So invest in yourself, learn a skill. You'll have it for the rest of your life. I'm trying to give you as much as I can at the best price. And then you can have a shot at being funded, work with us live, get on our trading desk, get you funded, start putting together real days like today over 10 grand. So that's what we're after here. And that's what we're building and working on into the beginning of next year. So if you got questions, the best way to reach out to me is via Telegram. I'll put the links again in for our free trading room in some of these posts, or most of you, if you're on the email list, you can reply back to me too. All right, guys, have a great rest of your week, and be talking and trading with you, some of you guys in the morning and into the year end.